You know, when you think about insurance companies, you usually picture something steady, maybe a little boring.
Slow and steady, yeah.
Mm.
That's the model.
But I'm looking at Anadolu Sigorta's 2025 results, and boring is not the word. We're talking total assets hitting 128.7 billion Turkish lira.
And a net profit of 13.4 billion.
Yeah.
Well, it's aggressive. This was a huge year for them.
Welcome. Let's first get to know the company a little. Who exactly are we talking about here?
So Anadolu Sigorta is basically Turkish insurance royalty. Founded in Turkey, headquarters in Kavacık, Istanbul.
Okay.
But the key thing, for any investor is the ownership. They're part of the Uzbankasi group. Milli Reassurance owns something like 57%.
So that backing is their biggest asset, really. Now, being an insurance company, I'm guessing no big factories churning out products?
Exactly, no factories.
Okay.
Their product line is their network. They have 10 regional directorates, Istanbul, Izmir, places like that, a branch in Cyprus, and then this huge web of 3,280 agencies.
And how many people run this whole operation?
They're running pretty lean, actually. The average employee count was about 1,853.
I always like to see who's steering the ship. Who's on the board?
The chair is Füsun Tümsavaş. And it's actually worth pointing out they have strong female representation. People like Professor Ferdi Yerlin Tatulu and Professor Seda Irtas Güler are signatories.
That's great to see. And what's the compensation look like for the leadership?
Senior management got around 139 million lira, and the board itself received about 18.4 million.
Okay, so let's boil it down. What are they actually selling day to day?
It's all non-life insurance. So think car insurance, fire, health, engineering. They're protecting things, not selling life policies.
Right. And where do they sit in the market? Is it a tough space to be in?
Oh, it's very competitive. But they're a market leader. I mean, if you do a quick SWOT analysis, their biggest strength is that Isbank's connection and their liquidity.
And the weakness.
High technical expenses. It's a constant battle for them.
So the big threat is, what, inflation?
Absolutely. Inflation drives up the cost of every car repair, every hospital visit, every claim. But their big opportunity, and this is the main story this year, is that massive investment income.
Okay. Now we can move on to our analysis. Let's dig into these 2025 numbers versus 2024.
So the revenue growth is it's sharp. Their non-life technical income, so the money from premiums, went up to about 89.4 billion lira.
And that was up from what?
From around 58.8 billion the year before. A huge leap.
But did that all translate into profit?
It did. Net profit hit 13.43 billion, up from 11.54. But here's where it gets interesting. The technical balance, so the actual profit from just doing insurance, that was 18.16 billion.
Wait, hang on. So their technical profit was 18 billion, but their net profit was 13 billion.
Not quite. The technical balance is one part of the equation.
Okay. But here's the number that jumped out at me. The investment income.
There it is. 33.99 billion lira.
That's insane.
It is. Think of the insurance business as the car. That investment income is like a massive jet engine strapped to the roof. It's generating almost double the profit of their core business.
So how's their cash position with all this money flying around?
Extremely strong. Cash and equivalents jumped to 27.4 billion lira. That's up from about 18.4 billion. They are very, very liquid.
And what about for us shareholders? What happened with equity?
Shareholders' equity went way up to 35.5 billion. And this is big. They quadrupled their paid-in capital from 500 million to 2 billion lira.
And they did that just from their own profits?
Yep, all internal resources. It was a bonus issue. Their capital ceiling is still higher at 3.5 billion.
Okay, let's talk about the scary part of the balance sheet. Liabilities. I saw this acronym, IBNR, in the auditor's report. What is that?
IBNR. It stands for incurred but not reported. And yeah, they have a massive reserve for it, 32.78 billion lira.
Okay, put that in plain English for me.
Think of them as ghost claims. An accident happened in December, but the garage doesn't send the bill until February. The company knows the bill is coming. They just don't know the exact amount.
So they have to guess.
They have to make a very educated guess. And auditors watch this like a hawk, because if you get that number wrong, your profits aren't real.
I also saw a note about a change in the discount rate.
Right, they changed it to 29%. Just that one little tweak in their math model increased their liabilities by almost 1.9 billion lira. It shows you how sensitive everything is.
So with all this profit, did they, share any of it?
They did. In 2025, they paid out 2.1 billion in cash dividends and another 1.5 billion in bonus shares from the previous year's profits.
So wrapping this all up, it was a financially rock-solid year. Huge capital increases, tons of cash.
And a heavy, heavy reliance on that investment engine to really drive the bottom line.
Exactly. They're playing two games at once, managing risk and managing a massive pile of assets.
It's a delicate balance.
Well, if you enjoyed this deep dive, please do like, subscribe, and share it. We'd also really appreciate it if you'd evaluate our channel membership to support us. And hey, don't forget, you can always use super thanks if you found this really valuable.
And before we sign off, here's a little something to think about. With their investment income nearly double their technical balance, is Anadolu Sigorta slowly becoming an asset manager that just happens to sell insurance on the side?
That is a very interesting question. Something to think about. We'll see you next time.